Hello guys, like I always said for beginners that the easiest way for you to kill your emotion in the market is going to higher time frame and try some things there. You understand? So if you stick to your 1 minute scalping strategy, you won't be able to feel more about the market because you will see spike as your enemy. Meanwhile, spike is just part of market movement. So for you to kill your emotion easily, just find a strategy that allow you to scalp on higher time frame like 15-30 minutes. You understand? So that with by that strategy you'll be able to accommodate some movement in the market. You'll be able to have more clear understanding about some movement. You won't see spike as something that's not supposed to happen. Meanwhile, it's something that will happen. So guys, my name is Akin, as you already know. If you are new to this channel, please at the end of this video, if you think we deserve a subscribe from you, please don't hesitate to click on subscribe button. And if you are a returning subscriber, as you all know, we keep dropping a very accurate strategy and a verified strategy. So I welcome you to this video. So now with what you can see on my screen, guys, I have only one indicator window. An indicator window is RSI that accommodates some moving averages, which is the envelope and the 1 to 5 period moving average. And on the main chart, you can only see one indicator, which is the envelope. So as we all know, envelope is an indicator, is a trend indicator that determines the trend of a market. So what we are after, our area of interest when we are trading boom, boom is defaulted to sell, while crash is defaulted to buy. This strategy is applicable to all boom and crash markets. 1,500, 300 is suitable for all. And this strategy is best in 15 minutes time frame. You understand? So let me show you the principal operation of this strategy, how it works and how it will help you make more profits in the market. So now, sorry, we are using the second zoom. Yeah. So now what we are after is a breakout of a trend. When we are selling, when we are dealing with boom, we have been looking at the breakout of the trend. This is the envelope work as a trend. It works as a support when the market is in uptrend, and it works as a resistance when the market is in downtrend. So now our area of interest is this: when uptrend break the support level to continue the downtrend. So now after we've seen a breakout of this trend, then we come to our indicator window to check for confirmation. How do we check for confirmation? The 1 to 5 period moving averages must cross this envelope too. You understand? The 1 to 5 period moving average represents the market in this indicator window. You understand? So after we discover there is a breakout here, when there is a breakout here, this moving averages also cross the envelope. You understand here? But that is not our area of interest. Our area of interest is when the moving averages and the envelope touch the 90 and 85 region of RSI. That is the overbought region. The 85 to 90 is the overbought region, while the 10 to 15 here is the oversold region. The 50 is for you to hold, broke even, or exceed the market. You understand? So now after confirming the breakout of this trend in this main chart, and we come to the indicator window, now we see the breakout here too, but the moving average has not touched the overbought region, which means our condition has not met. You understand? So we have to wait for the conditions to meet before we can take the trade. So now in less than few minutes, the condition meets, the market continue the uptrend. If you have entered from here, if you don't wait for the conditions to meet, you will have lost the trade. So and when this market break the trend, so it's also happen here, all the moving averages, 1 to 5 moving averages break to the envelope, then that is when you confirm your entry. You enter the trade after you confirm all the indicator here has broke the envelope. So now when you have entered the market, we now check the candle that break the trend. You understand? You will put your stop loss one candle before that candle that break the trend, which is this candle break the trend. This candle break the trend, you put your stop loss here. You understand? So your stop loss is going to be here. Then you are going to target your first TP should be the immediate low. You understand? The immediate high low before you spot the breakout, and this is the immediate high low, or I should call it a structure. If you don't understand that high low, if you don't have much knowledge about market movements or technical price action, so let's say this structure, when the market retrace, when the market is still uptrend, this is the market movement. You move high low, high low. When the market is uptrend, this is high, this is high low, high low. You understand? That is the market movement when it's in uptrend. So you check the immediate high low. That should be your first take profit. You understand? So after the first take profit as it, you can see if the another high low doesn't far from the first one, you can target to as your second TP or last TP. And after this first TP at it, protect your capital. You understand? Move your stop loss to broke even. You understand? This is 15-minute time frame, not 1 minute time frame. That is a long spike. We cut it out. You understand? So, and you have already safeguarded the trade because you have already confirmed the trend. So any spike that is going to happen is going to be within the trend. You understand? So it won't send you out in loss. So protect your capital after your first TP at it. Maybe you enter 2 position or 3 position. Just make sure the percentage of the close trade is more than the running trade. You understand? So that you won't still lose the trade. You get my point? So now after you have your TP as it, so you protect it in case it gets to this level but you are not sure, or when you have spot the moving average, the 1 to 5 moving average has get to this 50 region, you can just close the trade. So guys, that is how this strategy also is also good to catch spike. The same thing is going to applicable to spike, just that in other way round. So instead of looking for the breakout to the downward, you'll be looking for the breakout to the upward. That is, you'll be looking for the break of the resistance instead of break of support. So that is that on boom. You can see here too, there's a breakout here and there's a confirmation here. So when you enter from this candle, you see this is, you make sure this breakout is clear. You will confirm the candle that caused the break the trend. So you can see this is the candle here, this first candle after the blue line. Then you put your stop loss the last candle before that candle. Then your TP1 will be the first low high, which is here. The first low high is here. You can see that is when the market prefers before it continues, and the second is here. So your TP1 and TP2 should be that. You can also target here straight, depend on your capital. You understand? So what I'm after is that you understand how this strategy works in the market. That is my own that is the place I'm much concerned. You understand? I will make sure you understand this, so you can decide your entry, you can decide your take profit, you can decide your stop loss after you have gained the confidence in this strategy. But I have to make sure you understand how the strategy work best. So let's check another one. You can do some back testing. You understand? This is another one. There's a breakout here, you can see here. So the first candle, the candle that caused the breakout is this candle here. You put your stop loss here. Stop loss should be here, sorry. Your stop loss should be here, and your TP should be here. You see that as the market, as rough as this market here, it still hits your first TP. It get to your second TP, but it go back to your um stop loss. It will have sent you out, but if you have protect your capital, you won't lose this trade. You understand? Before you come to second TP. So guys, I will show you the settings of all the indicators on this chart. Then you can go to your demo account and develop your strategy. Let's share bull market too, so that a crash market rather, so that we have a clear understanding. So guys, this is crash 1000. If you can look at the chart, you will see that our this thing is not meeting up, our condition is not meeting up. So what should you do? That is why if I give you a strategy, make sure you watch the video to the end. You understand? So that you won't miss anything. If you are rushing just to get to the setup area, you get the settings and you go to your chart, you have your money to pay for that time you refuse to spend on the video. So now if you are trading crash, this is not what you are going to use in the chart. You understand? I'm going to give you what you are going to use in the chart. These same indicators, you understand? But this is what you are going to do when you are trading crash. You are just going to go to your settings, which is the envelope. Just click on it. Come to this place that you can see the upper and lower band. When you are trading crash now, all you need is your lower band. You understand? Move this blue color to here and move the white color up. Do you understand that? Move the blue color, this blue color, move it down and move the white to up. So just click on the blue, change it to white, click on the white, change it to blue. You understand? Then click on done. You can change it to red so that you will be aware of what you are doing. You understand? Or instead, you can put the two color on the chart like this. Let's do it like this. Like the upper band should be blue and the lower band should be red. You understand? So when you are trading crash, what you are looking at is this red. Or let me change it to green so that you will be knowing that you are buying, you are selling. You understand? Let's do it like that. Let's change it to green and change the upper band to red. Yes, so you can see the cross here, and this cross stop loss should be somewhere, the candle that break it here, target this place, target here. I hope you understand what I did there. I hope you understand what I did. If you don't understand, feel free to drop your question under the comment section. When you are trading crash, the green line, which is the lower band, the green line on the main chart, which is the lower band, is your area of concentration. So we are going to also change this in the window, indicator window. You understand? Don't let it get confused. You are going to clear at the end, trust me. So come to the envelope on the indicator 1 2. This is the envelope on the indicator 1. Repeat same thing you did to the other ones. Change this to red and change it to green. Click on done. It look confusing, right? Or it's more complicated. It is not. That is why I started the video with 1. If I started like this, it will be more confusing. So your area of interest is green candle, green line. This green line, you know you are buying green line. You can see the cross with the green line and see the cross here too. So You can see the cross of the grain. You can see the cross of the grain, first TP, second TP. You can see the cross of the grain, here, break of the grain, first TP, second TP. It gets there. You understand? When you go back to boom, what you'll be looking at is the red. The break of red here, the break of red here. That is, it's not complicating. It's not complicating at all. It's not complicating. That is why I start with one. I didn't apply all these two to it so that you won't get much confused. You understand? So that is that on this strategy. If you are still confused, please drop your comments. I will surely attend to you. Trust me. I will. I will attend to you. I'll make sure you understand it very, very well. You can see when you are dealing with boom, that is red. You understand? That is red. You know you are selling. That is red. See the red? See the red. You are selling. That is red. The red, the break of red. We are dealing with crash. That is green. You are buying. That is green. Green. So another way to make your chart look neat. just hold on. And just make sure the thing is more understandable. Another way to make your chart, this indicator window, to neat is by doing it like this. First of all, let me show you the settings of the envelope. This is the settings. You can just screenshot. This is the settings. This is the settings. Screenshot. So if you want to add to indicator window, the first one to add is your RSI, relative index. Click on it. This is the settings. The period is 1, apply to close, start 3 pixel. So this levels, these are the levels. Screenshots. So the next one are the moving averages. The moving average from year to year is 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Like here, it is 1. Shift 0, method simple, apply to close, style 4 pixel, choose any color of your choice. This one, 2, any color of your choice. This one, moving average 3, period 3, any color of your choice. Moving average 4, period 4, any color of your choice. 5, any color of your choice. So if you apply all the indicators very well, this is what your chart will look like. But if you are looking, if this is look more confusing, you understand what you are going to do. Just delete 3 moving averages. Click on here. Just delete 3 moving averages. Delete these 3 from year to year. Just click on the delete. Check it. Delete. Go back to your chart. So you can change the color, the green, that green that look like green, change that one, change its color so that it won't mix with the. Can change this color to the, this is 5 moving averages. Change it to black. Then click on done. So I think it still look confusing. What we are going to do again, change the pixel of that moving average. Go back there, change the pixel to 2 pixel. Go back to the second one, change the pixel to 2 pixel. Then click on done. You can see that the green and the red moving average are more thicker than the other ones. You understand? So the black and the yellow at the moving average will be looking to break, this is crash, we'll be looking them to break the grain from down, like here. They break it from here, and it's break here. You understand? If you can watch this video again, if you don't understand, just watch it again. If you can get it, congratulations. I'm telling you, if you can get all the explanation, congratulations. I won't say more than that. Just drop your comment section. Let me see where you don't get right. I will surely explain again. You understand? I wish you happy trading. Trade responsible. Thank you.